Ladies and gentlemen, Greg Mikulowski from ForexLive.com. As we head into the close for the current week and head into the new trading week, what are the technicals saying for the dollar versus Swiss franc? What are the risks? What are the biases? What needs to happen to either increase the bullish bias or decrease the bullish bias and shift the bias back to the downside? Let's take a look at this currency pair from a technical perspective with a focus on what's next. When we take a look at the dollar versus Swiss on the 4-hour chart, we started the week very close to where we closed the week last week. That was near this 100 and 200 bar moving average on the 4-hour chart. So the price, with the two moving averages converge, the traders had a choice whether we go higher or lower. And toward the beginning of the week, the buyers tried to take control. Then we moved below those moving averages, and it looked like the sellers were going to take control. But lo and behold, we found support against this swing area right through here, moved back above the moving averages, and then retested out the low of the moving averages right through here. I guess it's on Tuesday's trade before starting its move to the upside. So the sellers had their shot right here, and they missed, and the price then started to move to the upside. Now that move to the upside extended into Wednesday's trade, and then we ran into this swing area. This swing area has a number of different highs, as you can see, from midweek until today. Those levels or that swing area was defined by different swing highs through here, which formed this ceiling for the dollar versus Swiss between 0.9145 and 0.9156. The inability to get above that level right through here adds to the level's importance going forward. If we can't get above the ceiling, then the price has to move lower. But having said that, you see the 61.8% retracement level. That's of this move to the downside right here. Now we moved above that level right here, and for the most part stayed above it. We did have one failed break through it here, but the market quickly rebounded, and in trading here today, we found support right at that 61.8% retracement at 0.91334. So as long as the price is staying below the ceiling, the bias remains to the downside, but we need to get below the 61.8% retracement. If we can't do that, then guess what? The buyers are still in play, and we would expect that next week we would see a rotation back to and through this high ceiling area, finally breaking up to the upside. So in short, we'll be watching this level right here going into the new week at 0.9133. We'll be looking at this level up here to the upside at 0.91558, and we'll use those levels as our barometer for either more bullish above and more bearish below. If we move below the 61.8% retracement, the next key target would be down here at the 50% and the 200 bar moving average on the 4-hour chart. If we move above this level, it really opens the door for a potential move up toward the high price that we saw in the month of at the end of April, early May, which came up to 0.92237. Taking a look at the daily chart, that high price right through here stalled right near the high price going back to 2023. This area right through here, also near the high prices going back to here. So this area where the price did stall at the beginning of the month was a key ceiling level. Also near the level is a 50% retracement. So does the market have enough oomph to get through this ceiling right here and move back toward that 50% retracement, back toward that other ceiling? That's what's at stake in trading next week. So that's my technical look at the dollar versus Swiss heading into the close and into the new trading week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.